Good morning, good morning, good morning, good morning. We are back. We are back. We are live. We've got audio, we've got video. We are here. Thank you guys. I apologize. I know Friday I was scheduled to be off to make my move. Monday I made some very big mistakes where I was barefoot putting the computer together on the tiles, grounded out the computer. I blew the power supply. So could not get online on Monday. At the same time, while I was moving things around, I wound up ripping the fiber optic out of the wall. So I was going to be down either way. Everything's up, everything's running, everything was good last night, testing everything out, everything was great. And here we are at the end of September. Yesterday, we got down to 42.65.98. I went and I searched 4265 in my emails, and I go all the way back to September 7th. September 7th, the very first time we started mentioning it, saying close below 44.32, and we're getting more evidence for 42.65. Continued to talk about it and talk about it and talk about it. And what did you get? Boom. Now, this was the spread that was put out there last week on Wednesday, the September 29th for the quarter. This is not going to work. There is absolutely no way this trade is going to work. 44.50. We are going to get a red quarter, and I'll go over that in a little bit. However, the spread that was put on yesterday for the end of this week, that is undoubtedly going to pay you off. And that was the September 29th, buying the 43.05 puts and selling the 43.10 puts. And the reason why is because we are going to be closing on Friday above 43.10. Now, how can Tim go and say that? How can he say that? Well, the reason I can say that, even though I haven't updated this as of yet, because I'm still catching up, red week, and last week was a red week. I can go and highlight it here if we needed to, but there's no reason to because everybody knows closing at 43.20 on Friday last week is well below the 44.45 that we opened up the week at. So 3 red weeks in a row. Gonna bring you over and we'll go through that first. 3 red weeks in a row. Now, just gonna go here over where we've been and duplicate this because this is also 3 red weeks. This would be a 4th red week if we got it. Now, we did get 4 at the end of December last year, and it was only the Santa Claus rally delay. And both of those weeks were fractional. They were literally less than 10 points the third and the fourth week. Less than 10 points down on both of those weeks. Never, all during last year, never, other than that 7 in a row, which was the big drop that everybody knew was going to be coming, did we get more than 3. Now, go back and zoom out a little bit more, and you can go all through everything you want. You can go back as far as you want. COVID, there you go. 1, 2, 3, 4, 5. Everybody knew we were going to get that drop in COVID. Now, here we are in September. We knew well in advance we were going to get this drop. And here it is. And how did we know we were going to get that drop? And the reason is you don't need to smoke crack in order to believe. All you need to do is go and draw on your charts. And the full moon came perfectly, perfectly at that 45.15. Perfectly, could not have fit any better. Now, with the full moon coming on Friday, just literally ask yourself, what do you think is going to take place on this full moon placement? Which the window has opened up. The window has opened up plus or minus 3 days from the full moon, which is Friday, my birthday. Thank you very much. I'll give you the address to send all the gifts that you want. Cohiba's most preferred. Full moon, and this is where we're at. Come on now. I got audio going on in the background. I apologize for that. But yes, again, another reminder, all of you that are on PCs, you want your financial juice website, web page, web tab open. have your tick strike on, you want to have the news on, it's up to you. It doesn't make a difference, but it is beneficial. So we come back here, and here we are. Big gap over here from the weekend, or from last week, Wednesday, Thursday. Big gap. Big drop down here to 42.65.98 yesterday. And here we are with the futures right as of now. And I'm still getting used to the dragging because of these new monitors. Futures are up 30 points from the lows from yesterday. NASDAQ up, well, call it 110 points off the lows. The Dow tagging, touching, very big spot over there, 33,610 yesterday, 200-day moving average, big moves. Obviously, we are looking to start getting a little bit of a bounce. Now, on that bounce, let me get this straight, right? This is more a sell bullish puts credit than it is go out and buy calls. The reason being is because you've got your extended VIX. I'll come back to the SPX. You've got your extended VIX up here in the 1918s. We filled this gap. Fantastic. We filled the gap. You've got this extended VIX up here in the 1819s. So your premiums on your options are going to be very expensive as to what you are used to. You are not used to paying these kind of prices. The movement over there to get SPY to go up and VIX to go down is going to kill those premiums. Therefore, you are going to be looking at a very simple mathematic calculation as to whether or not there's value in taking a trade on the calls. That is why I decided for the September 29, 431 calls, it is in my opinion that A, they will work. That's number one. Move this down. Let me just get this right since we're here. I'm happy to be back with you guys. I really am. I really did miss you during those 2 days that I was off. The correction line, 431.98. That's my primary focus. So a rebound on the SPY back up to 431.98. I'm happy. My calls will either be flat or they will work out. But again, going back to the other chart, I told you. If you wanted to follow the September 22 QQQ puts that I was taking because I was going to be offline and didn't know if I could be online this week, there's nothing wrong with them. If you wanted to go and take the September 29s, that is the actual trade. Then later on, as we were getting that delay during Quad OPEX, I was saying, go ahead, go get your October 6 puts. Every one worked. Every single one of them worked. September 22, September 29, October 6. Now, here we are. The move down, 8.5%. The move up, 7.36%. Looking at a very rough, I didn't go to the penny Fibonacci line. Boom, boom, AB. I can't see a C 1, 2, 3, 4, 5 going down here. I'm sure that there is. I'll have to redraw that. But this very much looks to be completed as you've got your primary A, your primary B, which should be 1, 2, 3, 4, 5 coming down and right to the 200 extension at 354.50-ish. And you got a 7.25% drop. Right to that fake print that's been defending and right over here to this big 357.78. More importantly, when you zoom it out even further, you've got a nice big gap to be filled over here, another big gap over here to be filled. So again, we're not looking for an explosion to the upside by no means whatsoever looking for an explosion to the upside. Simply looking for an oversold bounce. Therefore, with SPY, 429.35 primary, 431.98 primary focus. Should we be able to get up to 433.25, everybody's laughing because you are coming into, again, the end of the quarter. Not saying we're the same. June 30th, last day of the quarter, 26-point gap up after having been dropping, 36-point range, plus 54 points above the previous close. Come over here onto March 31, the end of the quarter, only a 5-point gap, 54.5 point range after having been compressed the entire week, closed up 58.5 points. So again, those are green months, these are red months, and we are looking at not only red months, but we are looking, or not red weeks, sorry. August, red for the month. July, green for the month. So we are looking at back-to-back red months. We're already going to have a trade come the end of the week. The end of the week, going into October, we're already going to have a trade. Seeing 3 red months in a row, shit just doesn't happen. Being as oversold as we are, we're going to wind up getting bounced. Somebody miraculously is going to come out with something that is going to say, hey guys, the sky's more blue than it really is. And we're going to get our bounce as we start heading into earnings, as we start heading into October OPEX, and as you all know very, very well, with the QQQ down 7.25%, still having not gone to the 50 retracement from the May low. All that this is a dip. Everybody wants to sell the end of the world, how you have 3 red weeks here as well in the QQQ. Unfortunately, you do not have the end of the world. So we're going to continue moving forward with everything. And again, so that I don't ramble on anymore, I am going to go ahead and cut you off and wish you guys a fantastic Wednesday. I will see you in the chat room. I'm extremely happy to be back. And everybody who needs anything, please don't hesitate. Send me a message. I'm not yet Nolan Ryan, where I can go the entire 9 innings, but I'm getting there. And after a couple of days, I will be able to be here 13, 15 hours a day, just like I used to be before. See you guys soon, and let's make some money.